just do it. Don't be afraid to fail. Overcome that fear of failure. Failure is just part of the process. That's my biggest advice.
Are you a real estate investor looking to sharpen your skills, or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Hey guys, welcome back. And this is Sarah Larbi, and you are listening to Where Should I Invest? Real Estate Investing in Canada. I've got an awesome guest on the show today, Alfonso Salemi. And Alfonso and I actually are two of the three co-founders of the So Right Club with Daniel St. Jean as well. And Alfonso has a company called JAAG Properties with his partner, Adam Wissink. And so we're going to hear about what he does today on the show. And if you guys are interested in coming to the So Right Club, which is the Southern Ontario Real Estate Investing Training Club, we host monthly events, except for the summer, but we host monthly events and it's all real estate specific. It's knowledge, it's networking. So the next event is May 24th and the one after that is June 19th. So if you guys are interested and you haven't been yet, please send me an email. You can definitely come as my free guest for your first time around. You can email me at sarah@sarahlarbi.com, or you can send me an email through the Contacts Me page at sarahlarbi.com. So I want to say that Alfonso is a very big inspiration, and he has really started from scratch himself, has amassed a portfolio of 50 plus properties, and the majority of them are rent to own. He's also got some cottage rentals in Port Stanley that he's acquired in the last couple years and renting those on Airbnb short term. And he's also got some long-term holds where he's just holding properties and cash flowing. So some really, really exciting things. And if you guys have any questions for Alfonso, please check the show notes. And you can also listen to the end of the episode where Alfonso will tell you how you guys can reach out to him. So I do have a favor to ask you guys. If you don't mind just rating the show and providing a comment, it does definitely really helps others be able to find the show. And the main reason I really do this show is to provide education and to be able to create Canadian content for Canadian listeners. I think there's a lot of American content, and being able to really, really share Canadian specific information, I think is very valuable for us. So if you guys wouldn't mind, the more that you rate the show and you provide comments, the more visibility it will actually have on iTunes and other forms of, I guess, areas where you would find this podcast. So really appreciate that if you guys can do that. And without further ado, let's get on with our show with Alfonso Salemi. Hi, Alfonso. I'm excited to have you on the show.
I'm excited to be on.
Excellent. So for those of you that don't know, Alfonso is also a co-founder of the So Right Club, which I'm a part of. And so it's Alfonso Salemi, Daniel St. Jean, and myself. So I'm really excited to have you on. We've got lots of questions for you pertaining to rent to own and also some joint venture questions. You ready?
Ready.
My first question, out of curiosity, why real estate investing? How did you get started and why did you pick it?
Well, yeah, and it never was a goal or a career path that I had growing up. My background is in sales and marketing. So I went to school at Mohawk College, took the marketing program there, got into a couple different sales jobs, working for a small distributor of window coverings, then at UPS. And then I picked up a book called Rich Dad, Poor Dad. And after I read that book, it was just always in the back of my mind that I was trading my time for money and letting these huge accounts and only getting a small percentage of the actual profits that I was bringing to the company. So I, had that in my head. And funny enough, a couple months after I read the book, there was a lot of marketing. They were doing these training, real estate education training courses or classes. So I went to the free event on the weeknight after work. And then I signed up for, I think it was for a couple $100 for a weekend training. And then at the beginning of the weekend, I remember it was the Friday, I was like, wow, this is crazy. You can't do this. And then the Saturday, it was kind of like, wow, all right, this is kind of interesting. I can see that. And by Sunday, I was like, I got to do this. There's no other way. After reading the book and going through this. So I signed up for the elite classes. And yeah, I really just started educating myself and learning how to make money on real estate. And there was no turning back from then. At first, there was a little bit of analysis paralysis of all the different ways. There was, rent to own, there was multifamily, there was wholesaling, there was like all the different facets and different lendings and normal rental buy and holds and all that kind of stuff. So I kind of went into, that's how I got introduced to it. And then from then on, it was kind of like I needed to figure out which strategy was going to be mine and kind of stay in that lane and then go for it. So yeah, that was how I got started. It was really after I read that book and then that rat race, getting out of the rat race.
That's awesome. So just out of curiosity, because I know a lot of people do these courses, like what's the average price of one of these courses that you're taking, the like elite course or something at the higher level?
Yeah, well, I don't know. I can't give you a really good answer on what the average is. I can tell you what I paid. I paid $25,000, and it was for 4 specific classes. And one was rent to own. It was called creative financing. There was asset protection, and I forget the fourth one because I always forget the fourth one. But yeah, so those are those classes. I paid $25,000. I've heard $100,000. I've heard $1,000 for courses. So for me, I thought it was a good, comfortable level because it was almost like what I paid for college. So I was like, well, it's an education, and and their pitch was, well, you're going to pay it either in education or in real life. You're going to learn. So why not have some education background? And I don't regret it for a second. It was a life-changing thing for me that I did.
Yeah, that's awesome. I mean, I think it's important too that you've done something with it too, right? So you've done the course, you've learned from it, you took action. That's awesome. And if 100% of the people could be like you, then, these courses would work for everybody. And so I'm glad that it worked for you. That's awesome.
Yeah, thanks.
Do you know anybody or did you know back then anybody that was investing in real estate that was able to help you along the way, or was it just the course?
From a personal connection standpoint, no. Like I've heard of people that, they buy houses, they rent them, and that was their retirement plan. But I didn't know enough about that time. My actual first job was working on a construction site where a cousin of mine in Hamilton was a builder, but it had nothing really to do with the real estate. I was sweeping up the new houses before the people came in and helping whatever trade, if it was the bricklayer, the carpenter, the drywaller, whoever it was. So that was the only real estate kind of background that I had. After reading the book and taking these classes, that's when it really kind of, hit home for me.
Okay, very cool. So tell me about your first property. What was it and when did you buy it?
Yeah, so the first property that, I officially invested in after doing like 2 years of just like all kinds of crazy analysis on every type of property, it was a rent to own property. So it's no surprise for the people that know me, but it was a rent to own. And after I had also got a mentor in those classes that I had took. So I had taken the mentorship and we were analyzing specifically rent to owns. I had kind of narrowed down that was going to be the strategy that I was going to use. And the deal that came across an email that I was on a different email list was my business partner, Adam. And he had sent out a rent to own deal that looks exactly like the deals that we were supposed to be looking for or trying to analyze in these properties. So pretty much, I think it was 5 or 10 minutes later that he had sent the email, I'd said to him, listen, I want to invest in this one. I want it. It's mine. And he said, okay, cool, let's go. And at that point there, I just got terrified. I was like, oh no, now what? Right? So yeah, it was a rent to own deal. It was in Welland, Ontario. We can kind of go, if you want me to go into the numbers, a little bit of the details. Yeah, it was $170,000 was the purchase price in Welland, Ontario. The tenant buyer, which was amazing, I wouldn't get into the inner workings of a rent to own deal, but the tenant buyer had $20,000 as their option consideration payment. And so we had essentially had to come up with the balance, plus closing costs, land transfer, all that kind of stuff. So at the end of the day, it was about a $20,000, $22,000 investment that I had to make and obviously qualify for the mortgage. Back then, I still had a job and I was doing pretty good in the sales. So my income obviously could support the roughly $130,000, 80% loan to value mortgage. So I was on title. I had put up the capital, and my business partner, Adam, who had already done a few deals at the time, he was kind of the lead on it, but I gave him, it was like the first condition of the money was, I'm going to give you the money. I'll go on title, get the mortgage, but I want you to show me everything that you're doing and how to do a rent to own. So that was the first deal. And I can say, it was really great. She was a hairdresser. She took care of the property. Amazing. I don't even know how many thousands of dollars she put into the property, finishing basements, redoing washrooms, improving the property. And it was just, like from a first deal standpoint, it couldn't have gone better. And it was a real cool introduction into rent to own and how powerful it was. So.
Very cool. So I'm going to ask you a bunch of questions about rent to own, but also joint ventures. But first, can you just tell us what your portfolio looks like, what it consists of currently?
Yeah, so today with my business partner, Adam, we own JAAG properties. So the portfolio kind of is in there with a bunch of joint venture partners, but we currently have over 50 rent-to-owns in operation, which means the tenant buyer is moved in, paying their rent and saving up and qualifying for a mortgage. So about 50 that are in operation. We've concluded 15 successful rent-to-own properties to this date. And in terms of the normal rentals, we have about 16 doors kind of scattered through Western Ontario, through like London, Sarnia, Ingersoll, that type of area. And so 60 normal doors, normal buy and hold properties. I call them the normal rentals. And then 3 cottages in Port Stanley, Ontario, that we do Airbnb and weekday, weekend rentals.
Awesome. So a little bit of different things.
Mm-hmm.
So how are you financing all these 50 plus properties?
So at first, myself and my partner, we were financing them ourselves. Like that first deal, I was on title, got the mortgage. I think I got one more. After that, my partner, Adam, went on, I think 2 more after that. And then we were like, we're kind of capped out. And at this point, we were kind of, it was the initial stages of putting together the system that we operate now. And we were getting along really well. And we said, well, we want to keep growing. We don't want to stop doing this. We need to quit our jobs, get out of the rat race. That was always my goal. So we said, we have to find joint venture partners. Went back to my mentor and said, okay, well, how do you go and find this money? Now we're getting good at finding these deals. How do you go and present this? We refined our process in terms of presenting the deals to investors and kind of got over that scaredness of asking for money. It was more like presenting an opportunity. So what we did was just really started networking, getting to different networking events, meeting different people, anything that had to do with real estate. My friends and family got sick of me because that's all I talked about was real estate. And for the people that didn't understand it, they're like, well, you're not a real estate agent, so what are you doing, right? Mm-hmm. So that was, that's how essentially we started doing more of these deals, was just joint venture partners and kind of replacing myself as that initial investor that put up the capital and got the mortgage, and just found other people that were interested in doing that and making a return.
So one of the things, so I know you personally, and you've mentioned to me now it's easier for you to actually find investors, people that are willing to hold mortgages versus tenant buyers. So number 1, why is that? And then number 2, how did you find the joint venture partners in the beginning? For somebody starting out, they may just think that it's very, very difficult to get that money partner.
So at first, when I was taking the classes and the education, that's what my mentors and the people that were doing it and are still doing it said, once you find a good deal, it'll be easy to find money. And I was really skeptical about that, because I'm like, well, why don't these people with money go and find deals? And that's what it really was, is just the lack of time. There's no shortage of money. It's just a tool. It's just something that we can use, to create wealth. But how we found our joint venture partners was really the people that I met in those classes, and then the education that I took. Some of them just had no interest in actually becoming a full-time investor. They knew the principles, they wanted to learn it and be comfortable, but they didn't want to actually, put in the time or to find the deal themselves. So we would present these first to the network of people that we met that we knew that were interested in real estate, that wanted to invest in real estate, and knew the kind of deals like rent to own that we were doing. So that's the first group of people that we messaged out, and that list started with maybe 30, 40 people on an email, very similar to what we do now, but we've grown that list as we meet people, get different contacts and saying, hey, what are you doing to invest your money? Are you investing your money? Are you happy with your returns? And just kind of as an alternative option to what people are currently doing as, say, an RSP or, just your conventional stock market, that kind of stuff. So that's what we offered. And, obviously with rent to own, there's, a little bit of a higher return than, say, a normal deal. So it was attractive to people. And like I said before, people were getting kind of sick of me kind of talking about real estate. So eventually, when it was time that they did want to do something, they'd be like, hey, what are you doing with that real estate? Let me see what you can do for my money at this point. To find the joint venture partners, it has become easier to find people that want to invest in good deals versus finding the good deals out there. So that's what we focus a lot more on our time is finding those deals. But yeah, if you can explain it to somebody and show them how you're going to secure it, exit strategies, those type of things to make sure that, you're securing that investment. And that's how I treat everybody, all of our joint venture partners, anybody that's ever invested our deal. It was like the first deal that I did with Adam is that I'm not a huge risk-taking type of person. So I want to know, okay, what if this, what if this, what if this? And I grilled Adam through all those. And I take that approach when we have a joint venture partner to say, what are your fears? What are you nervous about? How are we protecting the downside? What's the likeliness of it happening? And if it does, what are our solutions? What are our options at that point?
Wow, that's awesome. So might be some people that are wondering what exactly is the difference between a rent to own and other types of investing. Can you briefly talk about that?
Yeah, the difference between, say, our normal buy and hold properties are like duplexes or triplexes or even single family homes versus a rent to own, there's not a huge amount of difference. The process is a little bit different. We find the client first versus a property first. So that's what we're really doing is we're vetting people that can't qualify for mortgages today for one reason or another. It's their, if they have credit issues, whether they have a low down payment, they're misreported their income, or their income they're not filing their taxes properly. All those waitresses, bartenders, hairdressers, contractors, those type of people. So we'll source them first. But basically, from a general standpoint, the rental is pretty much the same. For 3 years, technically, they are tenants in the property. So they are renting the property, but they have a purchase option agreement that they're guaranteed to buy the property, or they have a guaranteed purchase price at the end of the term that they have the right to buy the property at a set price. And part of the rental, they're still paying us rent every month. So there is a rent payment. And the second part is their down payment savings. So say if there's a total of $2,000 a month for a rent payment, say $1,500 of that goes to the rent portion and $500 of that goes down to their down payment savings. And with our credit team and through the program, we're training these tenant buyers to become mortgage worthy and to get them prepared to buy the house at the end of the term at that predetermined price.
So at some point, and you explained it to me in the past, and it makes so much more sense now, I was trying to figure out how they end up buying it at the very end when they're giving you the payments. Can you briefly talk about how you structure that and what that looks like? So you've talked about, there's extra payments, but how does that look like in the back end for them to get to the 10% that they need or whatever it is, right?
Yeah, well, that's a perfect example I was going to give you. So say that the future purchase price or what they're going to buy the property for at the end is $400,000. So typically we want all of our tenant buyers, for a safe bet, we try to get them to a 10% down payment. So that's $40,000 of a future purchase price of $400,000. So let's just say, that first example of a client that has $20,000 today for their down payment. So they give us that $20,000 as an option payment today. And then typically over the 3-year term, because that's most of our rent to owns are 3-year terms, we divide up that balance of that $20,000 over the 36 months. So $20,000 over 36 months is $555. So that's a separate payment that they're giving us to put towards that ultimately that $40,000 they need as their down payment. So that's how we get to that calculation of the $500 extra dollars that they give us a month. And then you look at it as a normal rental property that, okay, if your mortgage, taxes, insurance is, say, $1,000, if you were to rent it as a normal buy and hold, you wouldn't rent it for less than $1,000. You would rent it for, say, $1,200 or $1,300 a month. So that $1,300 plus the $550 is $1,850 a month that client pays. $550 goes towards their down payment savings so that they can qualify for the mortgage at the end. And the $1,300 is as if it was a normal buy and hold rental property. And that's how we split up the payments.
That sounds really interesting. So that's a lot of cash flow for you guys.
Yeah, so that's another reason why I love rent to owns is there's just a high amount of cash flow. I was motivated to get out of the rat race and quit my job and to do this and work on my own is, and as a sales rep, when you're working in a company, it's almost you have your own company within a larger company. So I always had that mentality of going out and finding my own business. So I just kind of applied it to the rent-to-own side of things and said, if I can get enough of these, enough joint venture partners, enough rent-to-own properties that we can create a steady cash flow, then I can replace my work income. And then that's, a huge benefit of rent-to-own.
So what are some of the downsides of rent-to-own?
Again, I'm pretty biased. There's not a lot, but for the downsides, I guess I've heard from other people that, well, you preset that purchase price. So, and we've seen that in a few properties now that we're coming to term with, and the clients are buying back, is that they are below market value. Say that we're selling it back to them at, say, $400,000, but if it was on the open market, it could go for $460,000, $470,000, $500,000. So you're maybe leaving a little bit of profit on the table. But the way that I look at it is, for the 3-year term, we were profitable. They paid down our mortgage a little bit over the 3 years. It was cash flowing for 3 years, and we're selling it typically at a 3 to 5% appreciation of what we bought it. So still a very attractive deal. But I guess that could be one of the sides of downsides of rent-to-own, is that, you are leaving a little bit on the table, not selling it on the open market. But at the end of the day, these people are getting into their house, and you're profitable throughout the program. So that's still a good thing. Other downsides of rent-to-own, I guess putting the deal together, there's a little bit more work involved. It's not just analyzing just like a property and saying, okay, well, here are the hard costs. We're really analyzing the client, because in most of these cases, they've had a credit issue, they're not claiming their income properly, or they haven't saved their down payment for one reason or another. So it's changing behavior in the client, in the tenant buyer. So that becomes a little bit more difficult when you're dealing with human beings that have ideas and life changes and things come up. So that could be a little bit of a downside as well too, because these people have established a certain pattern that we're trying to change to get them on that path to home ownership. So that takes a little bit more than just calling a contractor and fixing a leaking toilet. It's, having conversations, coaching, teaching the tenant buyers to get to that point where they're ready to buy.
So you mentioned toilets and repairs and maintenance. What is going to be your responsibility when you do rent-to-own versus a tenant buyer's responsibility?
Yeah, so now we've developed into our agreements is that the tenant buyers, they're responsible for all repairs, maintenance, and improvements to the property. This is going to be their property. They're the one that have gone out and chose the property with the agent. They've selected it, the area, the house, the amount of bedrooms, the amount of finished basement, garage, et cetera, et cetera. So it's, we call it rent to own, but it's a home ownership in training. The same way that, I own my house. If something happens or my sink leaks or there's a problem with the property, I'm not calling a landlord. I'm calling, 2 or 3 of those trades, getting a good quote, getting the best scope of work, getting the best description, and I'm hiring them to repair it. So we train our tenant buyers to do this as well too, because eventually they're going to own the home, they're going to qualify for the mortgage, buy the house. If something does happen, they're going to have to be able to know that they're going to have to go and fix it. And then there are things that in a house you need to maintain and repair. It's just, it's just part of owning a house.
Yeah, it's really interesting. So who would put this contract together? Would this be a lawyer and you and a tenant buyer as well, just kind of all, or is it just a agreement that you give them and that's the one that they have to go by? How does that work? Yeah,
so there's two separate agreements. One is kind of I don't want to say standard lease because that means something else these days, the new standard lease, but it's a lease agreement. It's a lease agreement that we would use the same way on a normal buy and hold single family house or duplex, triplex. It's a lease agreement. So that's one thing that they need to pay on time and do their best to not do damage to the property. So that's your normal lease. And then the second agreement, that's where we have the payment of that, the extra payment they're giving us each month for their down payment savings, and listed out the responsibilities that they are responsible for any repairs and maintenance of the property. So that's in a separate agreement.
Oh, that's very interesting. So I want to ask you some questions about your partnership with your partner, Adam, and what tasks you've divided and what you do and what he does and how that's working out.
Yeah, so a little background on Adam. He is an engineer by trade. So he is very numbers-based, spreadsheets, analyzing data. he's really, really great at that. And obviously with my sales and marketing background, I have a comfort zone with that. We've been kind of coming to the middle, both of us, a little bit better. I've been getting better with spreadsheets. He's been getting better with marketing and talking and networking and that kind of stuff. But that's how we kind of naturally fell into our roles and worked with each other. Is almost like that hunter mentality, is that I'll go out and hunt, and then I bring back whatever I hunt, and he tells me what we can eat, and it's not going to kill us. So that's the kind of the simplest way to explain it. There's a lot of overlap. What we do is when we're talking to new tenant buyers, explaining the rent-to-own program, we both do that because we both understand the program and we're explaining it to tenant buyers, and we feel comfortable explaining it to them versus somebody else. So we like to be the people that are explaining to the tenant buyers. Same with our investors. We want to explain the process to our investors. So we both do a lot of tenant buyer interaction and investor interaction and training and coaching, teaching them, the benefits of that. But when it comes down to, actually analyzing the deal, putting it in the spreadsheets, coming up with all the different costs, Adam is entering that into the spreadsheet, and I'm going out there and starting cool clubs like So Right to just meet more people, tell more people what I'm doing, and bring more attention to rent to own just in general. Yeah.
That is very cool. So you and Adam have been partners for how long now?
We officially incorporated in November of 2014, but our first deal we did was in June. Well, I guess they started looking for the property earlier. When we first met, it was probably around this time, I guess April 2014. So just about 4 years that we've kind of known each other, but officially incorporated JAAG Properties in November of 2014.
You guys scaled up very fast. Congrats. That's awesome.
Yeah, it's been fun. It's been really fun.
So you've also joined CareUp. Can you tell us a little bit about that?
Yes. CareUp is a cause that's really close to both of us, Adam and I. And the reason being is there's a lot of people that when I tell them about rent to own or they've heard about rent to own, they've had bad or negative experiences because it just hasn't been set up properly. So CareUp is an association. It's the Canadian Association of Rent-to-Own Professionals. And I actually was just elected to the board of directors this past November. And what our goal is it's to kind of almost standardize the process. Is that if you are going to do rent-to-own, you want to find that tenant first. You want to put the tenant in the best position that they're going to qualify. So even like any client that you put them in a house, you can buy any house and do a rent-to-own with them in any property. But if they're never going to qualify for a $400,000 property, you're not putting them in a position to succeed. So it's working those numbers backwards, knowing what they're going to qualify, and then sometimes, kind of crushing your dreams a little bit to say, well, you need to be in a lesser of a property to succeed and to get into home ownership, and then they can scale up from there. So yeah, CareUp is really great. It's all the members are across Canada. We're kind of getting ready for our AGM later in the year and hopefully having some cool presentations and just teaching and educating more people about rent to own. That's in a nutshell, without getting too, board member-ish. That's the goal of CareUp. It's just to make sure that people that are doing rent to own are doing it the right and ethical way for the right reasons, to educate clients, to get them on a better financial path, and obviously, give great returns to their investors as well.
So if somebody wants to find out more about CareUp, how do they find the information?
Yeah, so we just updated our website. It's www.carop.ca. Awesome.
Cool. So what's the next step for you? What are your goals? Where do you see yourself in the next few years?
Yeah, that's a good question. I love doing rent to owns, and this is my primary business and my bread and butter, and which I spend about probably 80% of my time doing. So we'll continue to do that. Probably get into a little bit bigger buy and hold property, say maybe apartment buildings. That's going to kind of be kind of an investment property that's almost like a set it and forget it, have the property manager there and just manage that property. And the other thing is, through So Right, and I've even done it a little bit just on my own, is really educate and teach more new investors that want to get started and don't love their current position or don't love their job, and to do that a little bit more too, and to educate and show people what I've done. I've been fortunate enough to work with and been trained by people that, were kind enough to show the way that they did it. And, I didn't invent rent to own. It's been around for 30, 40, 50 years. And somebody showed me how to do it, so that I want to kind of pass that along and share that. And if somebody really motivated to go out and start a rent-to-own company, I want to be able to enable people to do that, show them the steps and how they can be successful in their own business too. So yeah, definitely going to keep going on rent-to-owns for a while. Really love it, love doing that, but getting into some bigger multi-unit properties. And then, yeah, training, educating people. That's kind of my passion.
Amazing. Well, thanks for sharing. So are you ready for the lightning round questions?
Yes, I am, and excited. Yes.
Okay, perfect. So question number 1 of the lightning round questions is, what is your favorite real estate book ever?
All right. Well, it's not going to be the first time you've heard this one, but it is definitely Rich Dad, Poor Dad. It definitely changed my whole mindset on just life in general. So not only about real estate investing. And this is another controversial one now because he's the president of the U.S., but Art of the Deal by Donald Trump. And that's just a sales book, but it also, to deal with negotiating that we do every day in real estate, right? So just negotiating to the best deal and doing that. So, yeah.
Very cool. And listeners, if so far you haven't picked up that book, I think that the majority of the people that have been on this show have mentioned that book. So please pick it up. It is definitely a life changer, and you will remember it for years and years and years, and possibly, the one book that has changed the most amount of people. Number 2.
Absolutely.
What is your favorite podcast?
Without a doubt, it is Where Should I Invest with Sarah Larbi. That is my honestly favorite podcast. And you know the story, and I want to share too, is I didn't know what podcasts were. I didn't understand them. So you really opened up my eyes to what's out there in terms of podcasts. So yours is one that I always look forward to when you're putting up a new podcast. It's within like a few hours. I have an alert and I listen to it. But some other ones that you've told me about and that I've opened my eyes up to is Best Real Estate Investing Advice Ever with Joe Fairless. And just from a motivational standpoint and kind of feeling good is Inner Change Maker with Jay Wong. That's a really good podcast as well.
Awesome. Question number 3. What do you like to do when you are not working on real estate? What's your favorite pastime?
I like to play sports. I try to gamify kind of working out. I'm not a gym rat. I hate going into the gym and, counting, doing reps and all that kind of stuff. So I kind of coined the phrase disguise exercise. So anything that's like a sport that's keeping me active. I love golf. That's not too physical, but definitely doing a lot of more walking on the golf course. Playing tennis, that's a big pastime that I've been really doing probably twice a week. I'm on the tennis court trying to do that. And then just traveling anytime, any excuse that I can try to get away for, even if it's a few days. I was in Italy for 5 weeks last year, planning on doing something like that again, going away for just unplugging and having that laptop lifestyle. Yeah. So playing sports, traveling, hanging out with family. That's the stuff that, when I'm not doing real estate, I'm doing.
Sounds like fun. Number 4, if you lost all your money and your assets tomorrow, how would you start again?
Very similar to the way I initially started, was probably take some type of education, find somebody that has walked that path, that has done it, and is doing what you want to do, whether it's real estate investing or whatever, something else, is find somebody that's doing it and learn from them. And when I say learn, is just offer them your time and effort and say, what can I do to help you to find more deals, to market to more people, whatever the case is. And don't worry about getting paid. You're getting paid in education. So that's my recommendation is educate yourself, pick up Rich Dad Poor Dad if you haven't read it, read some books, go through a formal education process, whatever the case is. There's so many things out there, but it's definitely learn from somebody that's actually walked the path and put the time and effort in. There's so many different ways to do it. You just got to pick one and just put your head down and go and do it and apply it and learn and make those mistakes and make them quick and learn from them and just do it. Just go ahead and do it.
Awesome. Number 5, if someone has $50,000 and they want to get started, how would you recommend that they spend it?
Yeah, kind of similar to the last question is maybe take an education class, spend the money for a mentor, something like that. But definitely put it into a deal, into a real estate deal that interests you, whether it's rent to own, if it's a normal buy and hold, if it's a larger project, put that money into the deal and make that trade-off saying, okay, I'm going to give you the money, but I want the education. I want to learn the process of how you're doing it. And that that 50,000 will duplicate, double, triple, quadruple very, very quickly as you start learning that and applying it.
Awesome. Thanks for answering those questions. So if listeners want to get to know more about you, how can they reach out to you?
First and foremost, the website. So www.jaagproperties.com. That's JAAG properties.com. Or you can email me, Alfonso, ALFONSO, @jaagproperties.com.
Excellent. And any last words of advice or anything else you'd like to let the listeners know about?
Overcome those fears. That's the one thing that for me, when I was first starting, I didn't know anything about real estate. I just saw people doing it. And more that as we meet more people at the So Right Club that are brand new investors or seasoned investors, is just go and just do it. Don't be afraid to fail. Overcome that fear of failure. Failure is just part of the process. That's my biggest advice.
Amazing. Well, on that note, thanks very much, Alfonso, for being on Where Should I Invest? And see you guys next time.
All right. Thanks, Sarah.
Bye.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?